Prasinos, Editorial Director of Investing Daily, with a video presentation for Thursday, August 12. To view our full range of publications, visit our website at investingdaily.com. Also visit our subsidiary website, streetauthority.com. You know, while watching the beautiful art of synchronized swimming on television at the Tokyo Olympic Games, I couldn't help but see a metaphor for the global economy. Synchronized global growth is back this year, which is good news for investors who seek diversification. World economies rarely move in tandem. In fact, a synchronous global recovery, whereby growth in all regions of both developed and developing markets expands during the same year, has happened only a dozen times over the past 4 decades. The last bout of synchronized growth was in 2017. But this year, as the world's economies bounce back from their pandemic-induced beating, we're witnessing another sync. Take a look at the following chart. Not only are the world's regions expanding at a rapid pace, but most sectors are coming along for the ride. Remarkably, considering the devastation wrought by COVID, the global economy is firing on all cylinders. It's interesting to note that hedge funds are betting that freight rates for shipping will soar as demand for commodities rises. To be sure, there's currently a shortage of ships to handle rising global demand for everything from iron ore and coal to grains and sugar. Shipping rates represent a reliable transnational economic indicator. Generally, global stocks have been ascendant. See my second chart. Let's take a quick world tour. The U.S. economy is robust and should soon enjoy the added impetus of infrastructure spending. Monetary stimulus from the Federal Reserve is another big plus. Europe is on the mend as well, as manufacturing makes a comeback and central banks overseas follow the Fed's lead in maintaining low interest rates. Accelerating economic growth in the Eurozone, fueled by stabilizing government policies, has made the continent attractive, but underappreciated by investors. Europe's blue-chip transnationals are flush with cash and boast solid balance sheets. Emerging markets have bounced back thanks to commodities demand and favorable demographics. Meanwhile, China has resumed its role as global growth engine, assuaging anxieties that it would start to sputter. Economists expect China's gross domestic product growth to expand at the blistering pace of 8.2% in 2021, dwarfing projected growth of most of the developed world. Taiwan and South Korea also are expanding. With export-dependent economies oriented toward electronics and high technology, these two countries are positioned for sustained growth. Indeed, all of the Asian tigers have regained their roar. Even Japan is off the ropes. Latin America is resurgent as well. Mexico, Brazil, and Argentina enjoy plentiful natural resources, a highly literate population, a diversified manufacturing base, and an abundant agricultural export market. Then there's India. The jewel in the crown is a major destination for information technology outsourcing. The country's factories are humming. Its IT firms are hubs of innovation. The analyst consensus is that India's economy could grow by as much as 8 to 10% in 2021. Here in the U.S., the prospect of additional fiscal stimulus in the form of President Biden's infrastructure plan is helping investors put aside their fears about COVID Delta. And there's been good news on the inflation front. Take a look at this chart. The Bureau of Labor Statistics on Wednesday reported that the Consumer Price Index, the CPI, jumped 5.8% in July on a year-over-year basis versus expectations of 5.3%. On a month-over-month basis, the CPI rose 0.5% in July. The core rate of inflation, which excludes volatile food and energy costs, rose by 0.3% in July, below expectations of 0.4%. The core rate still spiked 4.3% on a year-over-year basis, but the latest numbers show that inflation is moderating. Earlier this summer, inflation was the fear du jour, but that sentiment is fading. Rising inflation reflects a recovering economy, but it's not running so hot as to torpedo the recovery and stock market. That's the balance Wall Street likes. Of course, COVID Delta remains a threat, but social distancing measures and rising rates of vaccinations are mitigating the variant's impact. This year, as global economic growth accelerates and infrastructure spending explodes, so will demand for one of the world's most important raw materials. Gaining exposure to this commodity is one of the most effective ways to profit from synchronized global growth. To learn more, consult my article that accompanies this video on the Investing Daily website. Okay, that should do it for now. If you have any questions, just send an email to mailbag@investingdaily.com. Thanks for watching, and please stay safe out there.